Welcome to Let's Talk Forex with Alison and Chris. Today we are very excited about this episode, and we're going to be chatting with the senior market analyst at XM.
Hey, Alison.
Hey, Chris. How's it going?
Yeah, not too bad, thanks. I was just complaining before we went live about the weather in Portugal. I feel like I've been complaining about the weather in Portugal all winter, though.
And I don't think it's founded other than today, Chris, where you said it's torrential rain, eh?
Yeah, torrential rain. Well, I was woken up with hailstones and thunder and lightning this morning, which is never pleasant. But yeah, I'm excited to be here and excited for our podcast today. We have Achilleas Georgolopoulos, who's joining us. He's senior market analyst, as you said, at XM. Welcome, Achilleas. Thank you so much for joining us.
Hi, Alison. Hi, Chris. Thanks a lot for having me.
And yeah, it's really great to have you on. We've got a lot to talk about. We're going to get to. It's been a busy week in the market since Trump took office, which we'll get to. But I also want to talk a little bit about you and how you ended up at XM. And we always like to talk a little bit about how people got into trading, and then we're going to get into, I think, the nitty gritty of what the markets have been doing in the last week or two. So just to start off, I mean, we'd like to hear a bit about yourself, Achilleas. You kind of came into trading. I mean, a lot of people we interview on this podcast kind of fall into trading, but you started off kind of very early on. I mean, it seems from your record that you were very interested in it. I mean, you got your undergrad in economics, and then you went and did a master's in mathematical trading and finance. What was it about trading that attracted you at such a young age? Did you know from early on that you wanted to get into trading, that it was what interested you?
Yes. Okay. Let's start by saying that, trading wasn't the first option, obviously. So when I started doing my bachelor economics, the idea is to get the basics, understand, deal with something which is you're passionate about, which I think is one of the key in life. So gradually, as you get into the degree, it becomes more interesting. You read about stuff. I think finishing the bachelor, I did a stint at the HM Treasury, so the finance ministry of the UK, where it was a good year, lots of developments, but it felt a bit, let's say, too quiet for my liking. So then masters in mathematical trading and finance, which was, of course, a bit more difficult than I expected, to be honest. But it was essentially full of mathematics, of trading, of options, risk management. So essentially all the bits you need at some stage when you trade. So I think it was a gradual process of reaching a stage where you say, let's say I have the basics, I have a bit of experience in terms of how, you can work, or you try to meet the requirements of a job. And then, you tie everything up and you say, maybe trading is something I can do. But I think the key, if I can make one line for, the people that are listening to us and they are quite new, I think you have to do the job, you have to learn the basics, and then you develop. I think it's something you develop throughout your life, but you have to start with the basics.
Yeah, obviously.
Yeah, and then after university, you started out as a rate strategist at UBS, and this was the golden years, you could say, for investment banking in 2006. You were just mentioning that you got to start out with the basics. So, can you give our beginner traders just an overview of what a rate strategist is, and I guess why they're important for investment banks?
Yes. So first job at UBS, let's say the good years before the storm, or the calm is before the storm, as some people call it. Rate strategists, essentially, we analyze bonds. We did sovereign bonds, for example. We did swaps. We try to make recommendations on the back of them. And of course, we have bond strategies, a bit of an analysis on the back of that. That analysis is on market conditions or the economy, on positioning the market. So it's quite an interesting point to start, essentially, because you get into apart from being interested, get into themes like you have to follow the market, you have to learn how a trade works. You deal with traders on a daily basis. I've been shouted a lot during the UBS, but I think that's a process you have to go through. Strategies, obviously, they are important. Rate strategies tend to be used, for example, by corporates when, you're going to do a new issue in the market. Then you have a discussion with your rate strategies, whether it's a good opportunity, it's a good period, what are the likely levels we can issue the bond. So, it is one of those positions that has, a meaningful impact for the bank and of course for the clients as well.
Very good. So it really built on the foundation that you had after you started with the mathematics and finance.
Yes. I mean, mathematics, I think, is probably that, if you go into trading or investment banking, everything, it plays a key role. Not because you're going to have to do the calculations, but it makes sense when you calculate, you understand the logic. When you deal with bonds, you get the yield to maturity, which is, very simple to calculate. Bloomberg gives it and the other platforms can give it, but it's interesting if you know the background of it. And of course, yield to maturity is probably the easiest one. Then you get into more advanced stuff, you get into options, and if you have a bit of a background, it's easier for you to communicate about that with, your salespersons, and essentially your traders.
And you mentioned then it was the calm before the storm when you started. I mean, I was in London at the same time. I was working in journalism in 2006. And when the storm did hit, the global financial crisis of 2007 to 2008, you had a front row seat for it, working in the investment bank. In fact, I think UBS warned of impending crisis in the US housing market just a few months before you started. What was it like? Because I know what it was like on the outside and being a journalist and at the time. What was it like being on the inside? What was it like working for an investment bank during that time?
Well, it was a difficult period, if I can say that. It started on, let's say, from my perspective, it started on a point, let's say July, August 2007, which was extremely interesting because we started to get lots of demand, especially from the US. Let's say from the US salesperson, especially what stuff that UBS had in the US about Europe and, a bit of information. I know it was US based, but that was obviously spreading everywhere. So it was demanding in terms of, we were, strategies start, very important again, because there are periods that are left on the side. However, it progressed quite quickly into a situation where it became obvious that, markets were crashing, central banks were rushing to help, subprime market, and the rest were having a significant impact. So it started as interesting, as demanding. At the end, it became very, very stressful and crazy, I have to admit. It wasn't, I cannot say it was unpleasant, but you could tell the difference between when I joined, when, everyone was happy, markets were okay, everyone was getting his year-end bonus. So there was
year-end bonus,
exactly. Yeah. Then we're going to a situation where, the banks were, facing serious problems. We don't know what the next day would bring, essentially. And of course, because banks are mostly, the interaction of human beings, it became a bit of a, let's say, crazy.
I can imagine a lot of stress, a lot of shouting, a lot of people worrying, I guess.
I mean, is that why you joined the special forces in the Greek army? Was that part of it? Was it quite soon after that happened, or did that not have anything to do with it?
Yes, it was mostly the idea that, in Greece we have military service, it's compulsory. So let's say the thinking behind that was that, 2008, everything was essentially at its worst point. So why lose a good year from investment bank and not lose a bad year? So the outlook was bad. So I decided, it's a good period to leave London, go back to Greece, finish that, and then, of course, try to return to London when conditions were essentially getting better. So it wasn't a one-off decision. it seemed reasonable at that time. I think it was decent in terms of the thinking process.
Yeah, no, it sounds like it was. I mean, do you find, I mean, you said it was compulsory, joining the Greek army, but do you find that the discipline engendered by the military service, do you think it made you better at your job, whether in finance or as a trader?
I think 1000%. I know we're going to talk later about, trading attitude and the rest. Let's say that, through, let's say very politely, through a year of learning, very few things at the army, but essentially doing your duty, you usually get a few benefits. One of those was the discipline. Okay, I was, let's say, quite old when I joined the army, but you do get into a process. You have to follow a routine. There are some rules you cannot really play with because there is punishment. And of course, that all sounds like trading, to be honest.
It does. It sounds a lot like trading.
But I think, 2 points also. One was that essentially the whole army idea is that you prepare for, of course, the worst case scenario, which also matters trading because, you start with your trading, you prepare. That's why you put your stop losses. That's why you risk part of your portfolio. So preparation also is important. And finally, let's say, because I was in a specific group, that, let's say, we were pushed into the training, let's say the third benefit or the third, gain you have is that, since you are there, whether you are trading, whether you are working, whether you're playing, basketball with your friends, you try to do your best. I think you use that time, you actually use that time. You don't just spend it.
Really interesting stuff. Yeah, no, I mean, it's, I think you're the first, person we've talked to on this who's actually done military service. But it's really interesting to hear, how it's affected your trading. And then after your military service, you went back to London, as you said. But this time you went to work for Lloyd's, and again, as a rate strategist, and again, amid another financial crisis. This time the Eurozone sovereign debt crisis. They seem to follow you around, Achilleas. These crises. This must have been a particularly challenging time for you in terms of communicating complex market dynamics to clients. Can you share examples of how your analysis helped clients navigate the uncertainty at this time? Because I think this time you were more senior, and I see that this time you were on broadcast media, and you had a much more public facing role.
Yes, I think you mentioned that, they follow me around. I think maybe, when, we are in the business or in the market, something happens and, there is demand for strategists. And I know Trump, we are living through the Trump area. So let's hope that we don't live another crisis. I think 2 have been enough for our lifetimes. Obviously, Lloyds Bank Next, exactly, proper research team. I have to admit that, from a career side, it was probably one of the best periods because, as I said, lots of demand for information. I was covering essentially the Euro area, so Spain, Portugal, Italy, Ireland, and of course Greece. So I was, being Greek obviously helps, but because I tend to read and I like the political side, that helped a lot during that crisis. Unfortunately or fortunately, when you follow an economy, for example, you have to know all the bits and pieces that affect that specific country. Lots of example about how I tried to help clients. I think a couple of them is that we had quite regular phone calls with the clients, sometimes during the weekend, which is unpleasant, obviously, but when it was necessary. And compared to, let's say, the other banks, which were, let's say, big and more established, we were a bit more relaxed as an atmosphere at Lloyd. So we had an open discussion with clients. Apart from the question, is Greece leaving the Eurozone? We get a bit more into the gist of it. So I think that benefit the clients a lot, especially SMEs, so small and medium enterprises, which tend to be less aware of what's happening outside their own country. And of course, what we tend to produce, which is typical in periods of crisis, that we're publishing quite often publications. One specific, and the reason I'm referring to it, is that we had let's say, decision tree. I think that's how it's called, that you get nodes and branches based on what happens. So I remember that being almost every week published of, if Greece says that, that's how Europe is going to respond. If Greece doesn't leave, those are the next steps. So you get kind of scenarios in a nice picture. I think that got a bit of attention because it's easier to read. It's, a picture is always worth more than words. So just two examples. Okay, there were plenty others, but helping clients through phone calls and interaction, publication is probably the key when you get into a crisis.
Yes, regular communication. And as you said, with SMEs, you don't necessarily understand, internal EU politics. As you say, like really important to break things down as simple as possible. But yeah, you do, these crises do seem to follow you around. And yeah, thank you so much for sharing that.
Achilleas, as you mentioned earlier, our focus is mainly on beginners, and you've really broken down, what you've all your expertise very nicely. But I just wanted to jump a little bit into XM, since that's that's where you're the senior analyst, and I just want to talk a little bit about their education. XM obviously has one of the largest education repositories among brokers. It's something I think we've awarded XM for. Really, really amazing education that you can find. Lots of live education and education around the clock. So it's fantastic. And I think you have 77 instructors in 23 languages, or the education available in 23 languages, if I'm not mistaken. And I guess as a beginner trader, we've spoken about your trading journey, and obviously you've got quite a different trading journey. And a lot of beginners that we come across get into trading because they either want a career change or, they've heard about trading from somebody else. So which courses would you recommend for beginners? Where would you suggest they start?
Yes, XM. I think there was a decision a few years to essentially offer, let's say, a very, very, very full package of education just to help beginners, but also advanced. So as you mentioned, we have essentially 3 channels, live program, at least 5 days a week. And we offer from the basics to full-blown analysis, where, of course, in every channel you ask questions. I think that's the big one there. Focusing on, beginners, we do have our XM Live, we have the beginner room, where we have sessions essentially analyzing how, you enter and exit a trade, analyzing technical trading, essentially technical analysis. Those are our beginners who start and they want to know simple stuff, apart from momentum indicators or how you draw Fibonacci. So essentially, it's like reading a book. You go through the basic concepts, and most of people like, of course, the visual part of it, because they can see, they can actually relate, they can open their own platform and see what is essentially the trainer or the presenter talking about. So lots of material there, lots of live sessions, and highly recommended for everyone to start watching them. Clients can start with a demo account, they can see how it works, and of course questions. I think that's why there is a bit of a progress from the XM side, is because we get questions, and of course we XM and the specific part of it, they try to adjust to the questions. So it's a big plus, and people should use it more.
Yeah, no, it is. And you mentioned there at the top, before you get into it, I mean, I just want to, that it's, you started doing this a few years ago, and Alison just said, I think it is the largest education program I've seen run by any broker. What was the thinking behind that at XM? Do you know that? Because it must be a huge investment. And I know a lot of brokers, we review a lot of brokers, and they haven't, most brokers don't even bother with education. And I think that's because it is a huge investment, both in time and in capital. So what was the thinking behind that at XM to roll out this huge educational platform?
Well, the understanding was simple, that we offer a product that, the access to financial markets that, let's say, the majority or very big part of our clients and prospective clients tend to know little, or let's say, because we're humans, sometimes we rush into something without necessarily being prepared about it. So the decision was a few years to actually create the program, but not just have the lives, because you mentioned we have 23 languages. So it's not that we have something in English, which tends not to be the first language for most clients, but you get something in your local language. So the understanding is, let's help educate the clients, because that, of course, really will make them more confident, and then they can trade more confidence. They can be essentially more prepared about what's coming next. And of course, with Trump being around, if you have been, if one of our clients have been following our essentially live program, our training session, and for example, he touched upon, or he spent a bit of time on risk management, then he's ready for big events like the one we are essentially living through it. So educate the clients, that makes them better, more confident, and of course that helps them going forward. But I think the key there is that it's an ongoing process. So you start, you learn, you implement, then you watch a bit more. So it's, even if you are a beginner and, for a year you read, you see our live sessions, maybe lots of stuff, then you shouldn't stop following now. You shouldn't stop reading, you shouldn't stop watching the channels, because obviously you always develop. So in one line, to help our clients become better, more proficient, but also to help them develop further after the initial steps.
You mentioned just about Trump and, how you help traders sort of, I guess, manage their risk around events like that. Can you give us a little bit more specifics on your thoughts on managing risk around key economic events?
Obviously, we are in a period where we have high volatility. Let's start with that. We know that, we expected that. That's how essentially after, Trump won, we knew that we were going to get in a period where it's going to be riskier. How do you manage risk? Our clients probably, they have been forced, or we recommend, for example, tighter stop losses, or trying to select hours where volatility essentially cannot be really controlled. I'm sure we can touch upon it, but there are clients that day trade, there are clients that hold position for a few days. With Trump essentially talking a lot after market hours in Europe, for example, if you have a trade overnight, you are exposed, because he can say something about tariffs and then you're going to have a very big move. So risk management as an approach, it means you always have, obviously, to limit your losses. Obviously, Trump, one more reason, you essentially implement, as I said, tighter stop losses. You don't risk as much as you do in normal conditions. And you try to, I know it's not the best strategy, but you try to follow the news. I think it's a big one. Of course, the same applies when you have a big event. It's not only Trump. So you have Fed, for example, we have a few times in the year, then I think the same strategy is very useful.
Totally agree.
Yeah, exactly. And I think that's, smaller position sizes, tighter stop losses. It's all very good idea at the moment. And you mentioned there that some traders, are day traders, and they kind of thrive with this volatility. I think it's harder to be a positional trader at the moment. Or maybe you find that different. And I think there's, and as you say, that there's reading the news, staying on top of the news is really important. What advice do you have for beginners when they're creating a trading strategy when it comes to this kind of day trading, or would you tell them to go into positional trading? And what roles do technical and fundamental analysis play in this, in creating a trading strategy?
Obviously, there are a few steps when you start. I think the idea is that you don't get carried away. You just, don't see one trade working for a day and then you go into trading and you put all your money. So I think you set out your plan. You start to follow the news, you start to get a feel for the market, what is moving the market, what's not moving the market, which are the best hours of the day for trades. Usually, it's between London and US. So you have quite a few hours. So you try to understand firstly, what are you trying to trade about? Second, then you go into instruments, what do you like? What do you follow? What do you think suits you best? It's weird, but, everyone could trade euro dollar, and you prefer, let's say, euro sterling because it's something you feel closer to it. I don't know. It just happens with some instruments. You feel that you can, let's say, not understand it, but it's easier for you to your frame of mind to do it. And then, of course, you go down of, I'm going to put a trade, how much of my capital I'm going to spend, how much time do I want to invest in trading? Am I going to become full-time, or I'm going to do a few trades per week, possibly specific hours, specific instruments and keep the position for a specific amount of time. And then, you start to test about your strategy, your entries, your exit, and of course you back test whether that works or not. There are specific steps. You've seen your videos. You detailed them quite a few times. I think that one, if I could give one advice or one important, is that you set up your steps, you reach your trading strategy, and then you just follow your trading strategy. But you need to do that work before you reach your trading strategy. So doing that work before you start to spend your money is going to pay off a lot over essentially your, let's say, trading career. Now, technical fundamental analysis, obviously you follow the markets, you read, you have to know which big events affect markets, the Fed, the ECB, non-farm payrolls, other big data like inflation. So you have to have a bit of a feeling. Having said that, of course, the pure tech analysts don't care about whether there is a war happening or Trump is ready to do something crazy. They only follow the charts, and the charts are telling them whatever they want to hear. So that's an approach as well. But I think it makes sense to have a bit of a base for fundamental analysis, but then you do your technical analysis, you do your preparations, you do your back testing, and then you start to implement your strategy.
Yeah, that's I think that's very good advice. That's really good advice. And then moving on, I mean, there's something that that's interested, I think, both Alison and I about XM is you've got a copy trading platform that's pretty unique, I think, amongst a lot of brokers and copy trading is really popular right now. But your copy trading's got lots of different filters, and traders can really customize their copy trading experience. I was just wondering, when we can talk about that as well in the copy trading platform, but what are your thoughts generally about copy trading? Do you think it's a good way for beginners to get started? What advice would you give people?
I think it's answer your question. I think it's a good way to start, because then you can test yourself in terms of, okay, I follow a strategy, I haven't done the work, but, in some of them, you can see how the trade is evolving. You can see how the market is reacting to specific events. It's like trying to read what the market reaction is going to be. So you try to get the feel for the market. Generally, it's very useful. And, as you mentioned, XM has a bit of, let's say, a specialized copy trading platform. We came a bit late into the game, 2023, essentially, but, we really invested in that. We have, if I remember my numbers correctly, more than 100,000 joining that. We have, you can copy for free. You only pay after you make profit. So, and as you mentioned, we have lots of strategies and, of course, filters, so you can pick and choose whatever you like. I have to admit, it's a good way. You can search, you can find someone who successfully you copy his trade, but obviously you don't gain the exposure, the mentality, the discipline. You don't test yourself as much as compared to when you do the process. Very useful, but I think it's complementary to your own strategies.
Yeah, I think it's a nice way to sort of, as you say, to enter, to see what other people are doing. I mean, you might not know why they're doing what they're doing, just because, to my knowledge, it's not a social trading platform. You can't actually talk to the trader that you're following. Is that correct?
from what I know, no, you cannot talk. I don't know if it's going to be an update on that at some stage, but as far as I'm aware, you don't talk to them. No.
Okay. So, I mean, from that perspective, as you say, it's not easy to really understand why the person's doing what they're doing all the time. But it gives you a good feel. You can see, as you say, what the market does, how it reacts to news. And because you've got a little bit of money on the line or whatever it is, it does feel like you're involved. I would agree with that. I think copy trading is quite a good way to get into trading, to very slowly ease yourself into trading. Just on that note, we actually have a video that we've made on your trading platform, Achilleas. I don't know if you've seen that. I'll put a link to that video below, and we talk about XM's copy trading platform. But I just want to get into algos. I know that you build algos using Python and different mathematical models. And, some traders obviously swear by automated trading. That's the way they trade. And then others, and a lot, I don't know, I would say a lot more traders prefer discretionary trading. What results do you find you get from automated trading? And I guess, how do you set up those parameters?
I have to admit that, just a bit of background on that. When I started, when I found a strategy that I was comfortable with, and then I started trading, then you get into the situation of, you have a bit of an issue with yourself, that you get the signal from your analysis, but at that stage, you don't feel it's the right moment, which of course is the wrong reaction. Because if you've done the work and you feel confident, because you have to go through all the steps, and then on that specific day, you say, I don't feel it's appropriate for X reasons. It could be something that you saw in the market in terms of headlights. And then maybe the best trade of your life happens. You miss the opportunity. So I have to admit, I'm a very, very, very big supporter of automated trading. It removes the main reason of, let's say, risk, which is, you competing with yourself. Okay, you can have discipline. People tend to be able to adjust to the mentality of the traders, of a trader, of course, that you develop through the years and unfortunately, through losing money. That's how you develop your mentality. But it's easier, stressful for you if you have an automated system. I tried, and I have used I've been using Python to do that. You can use any language you like, but I think it's quite not easy, but it is probably the best way to trade. Of course, you can do your own trades, apart from that, then you can do your discretionarily. You see an opportunity, or you think something is undervalued, overvalued. You can do that. I think the main trading platform should be, through or automated trading.
Okay. And do you have any advice for traders who want to set up their own automated trading models?
I think it's quite simple. You start with your programming language, whichever you like. As I mentioned Python just because it's, let's say, one of those languages that gets used a lot. You can find material, of course, on the web. You can read. You can even find code which is ready, and then you start. It's like a project plan. So you have everything set. Your trading strategies. And then you have a few steps of, let's say, build the process. Some of the code is you can find on the web, but then you go through some steps. They can take time. I have to admit, it took me a bit to complete the process, but the result is very, very, very rewarding. It can be a bit of a challenge for yourself, for example. You can show persistence, which of course is very useful being a trader as well. But in reality, at the end, it's going to be hard, time you spend, which is, it could take a while, as I said, but it will be the correct choice.
Absolutely. That makes a lot of sense. And do you ever use AI? I know AI's come leaps and bounds, and it's quite, from what I've seen, I haven't actually tested it myself, but it seems quite easy to create, robots, I guess, using AI.
I have used a bit of AI for improving the code I wrote, because I have to admit I'm not the best coder in the world. Obviously, I have a bit of a different background. So AI was used for that. Generally, I haven't used AI to create, let's say, a bit of a robot, but I only use it for my code. But I think if someone is starting now, over the next, I don't know, 2 to 3 years, it will be a must. So you will use AI for every step, essentially, of your process. I'm not against, obviously, AI. It's very useful. We probably use it more often, or people use it more often than they admit. But, for example, it's a form of AI, algorithmic trading, let's say, which was programmed, obviously, by humans, has been used for years. So it's not a breakthrough, but it could be very useful, if you start your career now.
Yeah. That's very good.
Yeah, no, it's true. I find that AI, I use it, as you say, quite often in all aspects of work. I find that it's not necessarily breakthrough. What I find is that it speeds the process up and it removes errors. And as you say, you use it to clean up your code, and I think that's fantastic use of AI. I know a lot of programmers who do. But let's change tack a little bit here. We're, as you've said, we've talked, his name has come up a few times already. We've got to talk about Trump. We're living in interesting times, as the Chinese curse goes, and Trump has been president for a week now. Before he took office, and the months between the election win and his actual inauguration, there was a lot of rumors flying around about what he was actually going to do. There was talk of all kinds of tariffs on the BRICS countries, tariffs on Canada and Mexico, 60% tariffs on Chinese goods, all kinds of stuff. And with all this rumor and press leaks that we were seeing, it was hard to set expectations, I think, for what you thought Trump was going to do in his first week in office. Has his actions, and I guess the market's reaction as well, has that met your expectations in any way since he's taken office?
I think he's moving in line to what he was essentially talking at. He was saying at his pre-election campaign. I know that politicians say everything to get elected, but I think based also on his first term, Trump was quite clear about his strategy when he takes over. He likes tariffs. He likes putting pressure on everyone else in order to essentially gain what he wants to gain. Either that's more trading or even adopting a new country. So I don't think generally he, let's say, exceeded expectations. I think he's doing what people expected. I have to admit that to a certain extent, that he has been a bit more, let's say, quiet in terms of the tariffs, because as you said, he was talking about 60, 70, 100% tariffs, and now we dropped to 10 or 20% tariffs. So in one word, he hasn't disappointed. He as expected. However, obviously, he is getting bolder. I think that's what or the markets are afraid of.
Yeah, exactly. I think I agree. As you said, it was really interesting, actually, his first day in office, with all these executive orders went out. There was no mention of tariffs until he sat down in the Oval Office for his first press conference. And you can see, since he's taken office, the DXY, the dollar's slid by quite a few points. It's back up again today. But do you think a lot of these threats of tariffs are just that? Do you think they're threats? Do you think they're negotiating tactics? Or do you think we will actually see tariffs come through at some point?
He will impose tariffs. I think that's a given. I think the size of the tariff matters, obviously. The 10% tariff is obviously nothing major for a country like Canada or Mexico. So imposition of tariffs is a given. I think most market participants believe that. Obviously, and we had the events over the weekend with Colombia, that, as I said, he probably is going to become a bit bolder in terms of his demands. So the more he asks and people react, then he's going to increase the tariffs. The interesting up to now is that he hasn't talked, or he talked a bit about China, which I know it's his big problem, but it's not that he started like he did during his first term, like a an Armageddon against China. So he started with easy targets: Canada, Mexico, I know Panama is also targeted, and obviously, Denmark and Greenland. So he believes in tariffs. I think you have to understand the mentality of him. He likes tariffs as a means to implement his agenda. If 10% tariff makes the job, he'll do the 10%. If 50% tariff is needed, he'll do the 50. He doesn't have any problem with that, because then obviously he can sell that to his internal audience. So we are going through the tariff period with an uncertain end, of course.
Yeah, it is. And I mean, on the flip side of this, of course, what is his problem is interest rates. I mean, he said specifically, that he wants the Fed Reserve to lower interest rates. He said during the election period, that he would like to see a weaker dollar. And then he said last week, I think I know interest rates much better than the Fed do. And I think I know them certainly much better than the one who's primarily in charge of making that decision. Talking about Jay Powell there, I imagine, the chair of the Federal Reserve. Meanwhile, I mean, we've got this talk of tariffs, and you say like we're almost certain to see tariffs be raised of some kind. And most analysts agree that that's going to lead to higher rates for longer and a stronger dollar. I saw PIMCO's chief investment officer saying the other day that he expects the Fed to keep rates on hold for the foreseeable future. Who do you think is going to win here between Trump and the Federal Reserve? And do you think the independence of the Federal Reserve is truly under threat in this case?
Well, we know that Trump loves the Fed. He loves it, or he loves everything about the Fed when the Fed helps him, and of course he hates everything about the Fed when it goes against him. I'm not relating him to Erdogan, but I think the Turkish president has said the same, that more or less that I can do better monetary policy than the central bank, which sounds like what Trump said, but obviously different levels and magnitudes there. Well, in terms of how the rates are going to go, obviously, the PIMCO comment is quite clear. The markets are expecting 2 rate cuts. The dot plot from the December meeting is pointing to 2 rate cuts. So let's say that there is a bit of a market inclination towards further cuts. Are these certain? 100% no. We can get from tariffs to essentially something much crazier happening in the world in terms of conflicts and wars, and then we talk about a different ball game. Fed independence, because you asked. For now, it seems to be secure. Obviously, we know that Trump is going to talk a lot going forward. If there is a Fed meeting and there isn't a rate cut, and we get the press conference, then 2 hours later he comes out and he's going to essentially attack Powell and the rest of the Fed. So he's going to do that. I think the markets are prepared for a period of President Trump essentially going against the Fed. But there is a bit of a distance from the Fed being independent, but essentially under lots of pressure and criticism from the president, to essentially losing its independence or changing the mandate, which is a bit far-fetched at this stage. Next question, of course, if you talk to market participants, is that, if he doesn't like Powell, he can fire him. It's not as easy, obviously, but if he starts to play with the presidents, with the chairmans, and he fires Powell, and then he gets in one of his close allies, there is no guarantee that, 2 years later or 6 months later, he fires that guy as well, in order to put another guy who is going to do whatever he wants. So you get into a circle where essentially the Fed becomes controlled, manipulated. And of course, is the worst case scenario for the Fed. The dollar is not going to like it. The markets are not going to like it. The rest of the world is not going to like that. Fed, the most established, number one central bank of the world, becoming essentially a toy for President Trump. I know this is a bit extreme, but replacing Powell has been something that has, let's say, tweeted or rumored for a while, but we're not there yet. For now, or for the next 2-3 months, we're going to get Fed meetings and we're going to get criticism from Trump. So let's see whether he ups the criticism and the pressure on the Fed, and then we can see how the market reacts, of course.
Yeah, I think I agree with you. I think for now, I think the Fed is safe. But yes, I think a few months down the road, we'll have a clearer picture of how far he wants to go with this. And more generally, we saw, as I said, the DXY was down, the dollar's down since Trump took office. But then overnight last night, there was yet another leak to the press that Scott Bessent is thinking of a plan with incremental 2.5% tariffs, universal tariff on all goods coming into the United States. And we saw, the DXY gapping overnight, and it's back up again. But this has been a function of the markets all week with, as you say, with Trump overnight causing huge volatility in his administration. With so much volatility in the markets, how do you, I know we've touched on this already, but more specifically around the Trump administration causing this. How do we hedge against Trump risk, as it were, for traders?
Well, I think the best obviously strategy, if you fear a lot of Trump, or if there is a scheduled meeting, or let's say that, like last week when he was at the Davos meeting where he talked about interest rates, if you fear that at a specific point he's going to be very aggressive, then you don't trade. Let's start with that. You can be ultra safe and say, you know what, I'll save my ability or my urge to trade today, because I feel that, whatever analysis I've done or my trading strategy I've done, he can do one headline and essentially cancel out my whole trade. So the extreme reaction is not to trade. Obviously, if you can manage that, you are okay with your risk management, you feel that you've gone through the period of the pre-election and the post-election period, and you are happy how you have performed, then as I said, you trade at specific hours or even days that you feel more comfortable. You might opt not to have overnight trades if you are based in Europe or in Asia, as we mentioned before, because you don't want one headline messing up your strategy. Obviously, you do what we mentioned with stop losses and smaller sizes and the rest, but you have to accept that this is something, obviously, you cannot control. It could be a quiet day, it could be a quiet week, and then Friday evening, if you have a position over the weekend, Trump is upset about China, then he says, Monday, 20% tariffs on China because they don't respect us. And then your whole weekend is probably ruined, which you could have saved by, limiting essentially your trading. I know it's not optimal, because if you're gonna trade through all the positions and of course be profitable, but you have to adjust. I think that's a big one. The adjustment and how you develop as a trader will give you the ability to select that now I'm trading, now I'm not, or now I'm going a bit more aggressive, or now I think I have to limit my exposure because Trump essentially is generating volatility. I know we haven't mentioned specific instruments. For example, if you trade oil, which is far from effects, but Trump has been one of the key factors for what we've seen in the markets lately, and not unexpectedly, but it's something that you cannot incorporate in your models.
Yeah, no, I agree. I agree. It's a tricky one. More generally, I want to touch on equities quickly as well, and especially in light. We're recording the day after DeepSeek was announced in China, and showed that their large language model costing less than 5% of OpenAI's model as was released, and they've let it out open source. And we've seen, I think, $600 billion wiped off NVIDIA's market cap overnight, and the NASDAQ is down. But in the build up to this, we've seen US markets have been outperforming global markets for some time now. And it's not getting to the point it's unprecedented. S&P 500 hit a new high last week. And the US market at its highest valuation relative to the rest of the world. on forward earnings since at least 1988, which is when data collection began on this. Do you think there's an overconcentration of capital in the United States, US markets, and do you think it's justified?
I think the answer is probably simple. The answer is yes. You have the strongest economy in the world. You compare it with Europe, for example, and the US is miles ahead. You have very strong consumer spending, which is the basis, of course, of everything. You have let's say, to put Trump into the question in a positive way, you have a president promising the golden age of the US, which for some investors, sounds credible. And of course, you have that trend over the past years with tech and AI. So it absolutely makes sense that there is lots of capital going into the US to take advantage of that. The problem is that when you get lots of capital, chasing a few assets, you get inflated prices. And inflated prices, we know what happened essentially with the .com and the rest of the market crashes. I think it's a period where most people want to get a piece of the pie, essentially of the highs, the higher highs we see in all the tech stocks. But obviously, it means that we're getting into a period where you have to be very, very careful. I have, I was looking a couple of comments about bubbles, about how many years took them to recover the money. And I think it's quite scary.
It is. Is that what you think you're seeing here now in the US equities market? Do you think we're seeing a bubble forming?
I think most people accept that we are into, let's say, bubble. I think it's a nice word, but we are in a period of inflated prices, I would say. It could be a bubble. Specific stocks might be in that specific situation. You get valuations. It's obvious that we are, at levels we haven't seen for a while. But there is a reason. I think as I said, there is a basis of why everyone wants to buy US equities. There is economic reason. There is a liquidity reason that, there is lots of money into the system, essentially after COVID, with all the central banks flooding the markets and, generally people trying to get a return on their savings and whatever they had aside. So it makes sense we are in this situation. How is it going to end? I think we probably know that at some stage there will be a decent correction. We don't know if it's going to be a market crash, but every few years the market likes or is forced to readjust, essentially start over again from a lower level. When is that going to happen? Obviously, is the question that people can try to answer, but no one knows. I think what you can do about that is that you try to find likely catalysts that can cause the bubble to burst, for example. One of the catalysts could be this year the Fed starting to hike, which I know sounds a bit weird, but as you mentioned earlier, tariffs, higher inflation, Fed has to respond if it essentially wants to, or it essentially is going to honor its independence. So we get in the situation, it's a scenario where equities will find it difficult to rally. And of course, we might have the correction that, let's say, a handful of market participants have been expecting for a while.
Saw that with crypto very recently in 2021. And following Trump's victory, we've seen crypto come back in a big way again, hitting over 100, Bitcoin. Obviously, we've seen Trump's new coin and Melania's new coin and their pastor's new coin. So crypto is really back in a big way. And obviously it's quite an attractive asset for many traders just because of the volatility. But obviously the fundamentals behind crypto is another story entirely. Would you suggest trading crypto? And how do you manage your risk when doing so, if you do?
Crypto, I think it's a market that most people follow more closely now, especially after Trump. I think before I answer the question, one point I forgot to make earlier is that it's very bad for traders if they trade an asset which is only going higher or invest in an asset. And I think we have seen a few years of, for example, equities that we were just discussing going higher. So it makes it easier to think that, this is asset is never going to correct. Same as cryptos that, we started, it started very early. Of course, at some stage we got the rally. Everyone thought this is going to the moon 1,000%. It's never going to fall. And then we got the big correction. And of course, now we are, as you said, we are at a decent level as well. But as a general comment, I think corrections educate traders a lot. So I know they can be very stressful, and lots of funds can be lost, but it's very difficult that you get a new breed of traders who only know that assets go up. And, we discussed that a lot in the team that, the new traders or investors in the market, they haven't seen a market crash. And when that happens, they will probably, unfortunately for them, suffer a lot. Now, crypto, obviously, it's a very risky market. So whatever we said about Trump, about periods where there's high volatility, that applies double, when you trade crypto. We like, I think most people like the technology behind cryptos, the blockchain and the rest. So that's a different discussion. Crypto as a trading instrument, I think, most traders can incorporate that into their everyday routine, but they have to be very careful. Higher volatility, higher potential profits, but it's not difficult. You spend a week in crypto and you lose all your capital. So, and of course, new traders, final word, that is, let's say that it's advisable for them to start trading more established assets. I think it's like Bitcoin and XRP and Solana and the rest. So I know profit margin might be less, but then you understand how, crypto market works.
And do you have any thoughts on the long-term outlook for crypto? It's a difficult question, I know.
Yes, of course. I think everyone agrees that it's going to be, or it's becoming mainstream. I think quite a few of the big asset managers, they tentatively are suggesting a small portion to their investors, a small portion of the portfolio invested in cryptos. So we are in a period of the crypto, essentially. It looks like that this will continue for the foreseeable future. Obviously, I think because of Trump, we are seeing this year, I think three, let's say, different tendencies. One, you have Bitcoin, which is the more established, is the biggest one. Some people treat it as money. So that will probably remain where it is in terms of, separating itself from the rest of the cryptos. Then you have the US-based ones, if I can call them, like XRP, for example, which are gaining a lot of popularity because of Trump. He made a few comments last summer about how we're going to, I think he said not support, but build or create US-based crypto, as if it matters whether it's created in the US and the rest of the world. But we see a tendency, essentially for them increasing popularity, as I said, which of course has an impact on price. And then you have the rest of the assets like Ethereum, which, let's say they have demand, but they seem to be struggling compared to Bitcoin and, let's say, XRP and Solana. So in one line, mainstream, it will be here. Obviously, lots of changes are going to happen, so our traders should be very careful.
Yeah, no, I agree with that. I think it's going to be a big year for crypto with Trump at the helm. But as always, I mean, regular listeners will know I'm a crypto skeptic, and I think it's as you say. I think there's a lot of risk attached, and I don't know, Alison. I mean, would you put your money in crypto now?
Yeah, as you say, I don't know if you start now. And it's not an asset that's going to go, it's very unpredictable. So, yeah, for me, it
is certainly much like the markets under Trump. Achilleas, I think we should probably leave that there. It's been about an hour. You've been fascinating to have on. Thank you so much for your time.
Thank you very much. You told me an hour. I thought it's been about 20 minutes we'll be discussing.
That's good. That's really good.
Yeah, thank you so much. You really delivered a lot of value to our listeners, and we really appreciate your time today.
Thank you.
Super. Well, we'll leave it there. Thank you so much, as always, for tuning in. If you have any questions or you want to get in touch with us, you can get in touch with us at podcast@fxscouts.com. And Alison and I'll be back next week. And Achilleas, we really hope to have you on again in the future. Thank you again.
Thank you.